If you want to go sectors now, I think it's a good time for it. We can talk sectors if you'd like.
Well, again, I mean, we can look at the indexes if you want, but the sectors are the story,
That's right. Yeah, I'm
right?
with you. I'm with you.
That's just where my head's at. And so, and so I can break down the Dow, or I can look at what people are actually going to be looking at,
Give me
and
those
that's the
sectors,
industrial
brother.
sector, which
Give me
is,
those sectors.
yeah, exactly.
Mhm.
All right. So when you're looking, and everybody, for the pro members of Tackle Trading, there are a couple reports that they focus on a weekly basis to prepare for the market. Our two watch list reports for the equity market, the stock and the options report, obviously is kind of foundation 1 and 2. The newsletter at Tackle Trading, and Coach Gino wrote the newsletter this week analyzing the sectors, going through the rankings. That's obviously that the belief in the top-down approach to the market. For those of you that have been around Tackle a while, you know where our head is at regarding the top-down approach to the marketplace. And so I feel the newsletter is a great place to really get that foundation of top-down analysis in the market. And in that we rank in the newsletter specifically, we rank all of our sectors. In the commodity report, we rank all the commodities. And in the Forex report, we rank all the currencies out there. And so in the newsletter, basically, we were looking at a market condition, and obviously every week, the first thing we rank, because it is the barometer, is the S&P 500 itself. And Tim, we had a very spirited conversation on the ranking of the S&P last week on Friday, because we were coming on the backs of the one-day rally, but that was right after we clipped the 50-day moving average. And as a lot of us are pure technicians, some of us are technicians with the top-down kicker to it, and that's where I'm at. And we had I don't want to say there was a difference of opinion. It was just more about what is the accurate ranking for the marketplace. And given the fact, I think what the winning argument was, because we did end up maintaining price action, maintaining our ranking of 30 on the S&P 500. We did not downgrade the broad market in the face of the volatility, specifically in the NASDAQ and the discretionary space. Personally, I felt this storyline is a sector-based storyline and not a market perspective storyline. And so I just didn't I think at the end of the day, we just really like that double bottom on the marketplace that we saw on Thursday and Friday. You were breaking out of that intraday analysis on Friday. And so, I mean, timing is always important in the market. There's no doubt about that. If you were to ask us on Thursday with the breaking of support, this is probably a downgrade situation. There's no doubt about that. But given the fact that we did double bottom, we broke those intraday resistance levels, I think the coaches felt really comfortable maintaining that 30 handle on the S&P 500. And with that 30 handle, let's take a look at and a 30 handle for us, guys. Sometimes I just assume everybody understands tackle lingo, Tim. But what a 30 handle is for us in our scouting reports, guys, is it's a slightly bullish ranking on the stock market. And I believe that slightly bullish ranking reflects the stock pickers market, number one. It also reflects the technical trend slowing momentum and the increasing volatility here. Yes, we're 2% off the all-time highs, but you're also 2% off the all-time highs in an increasing volatile condition, with sectors separating themselves in a fairly, probably a more volatile news type media perspective. So you do have that from an S&P. Now let's take a look specifically at the sectors. And where I want to start with here today is I do want to start with the downgrades that we had this week in the marketplace, and where the pain is really at. Yes, we can talk about what's happening in the bond and all that, 2-year versus 10-year versus what's happening with the 30-year. And later on today, we're going to geek out on some Fed talk, guys. So get ready for a nice little Fed talk podcast later on today, because we are going to talk about what the Fed, specifically what's in that full still box, right? We talk about the Fed toolbox and all these things they can do. We're going to do a little bit of a what's in that toolbox. What can the Fed do, and what tools do they have at their disposal to help alleviate some of this monetary, economic, or stock market pain people realize every now and then. So we'll have that conversation, but let's take a look quickly at where the storyline really is, and that's in the technology sector and the discretionary sector. Now, specifically technology here, we did do a 10-point downgrade, went from the positive 30 slightly bullish ranking to that of a positive 41. That puts us in the neutral to slightly bullish leaning category. But given the fact that you violated your support levels, both in terms of horizontal previous resistance as well as moving averages, those are some fairly substantial violations of support, and you got to reflect that from a ranking perspective. And so when you're looking at rankings and you see that positive 40, sometimes when we're looking at neutrality right below a resistance breakout, that's that positive 40. We're anticipating the breakout. That's actually a fairly decent scenario to be in, because again, you're in net neutrality and you're just waiting for that breakout in the marketplace. But then again, you have other degrees of that, because there is subjective nature to how rankings happen. Well, when you're looking at a short-term bearish downtrend, and this is a short-term bearish downtrend in the NASDAQ, you have this short-term bearish downtrend, lower low, lower high, lower low, lower high. You also have that in the discretionary space as well. You have a lower low, lower high, lower low, lower high. You have these short-term bearish downtrends, but when you have a short-term bearish downtrend in a longer-term bullish uptrend, that typically shades to the longer bullish term uptrend. And that's why you have a positive 40 ranking and not a negative ranking in a short-term downtrend, is because the longer trend is always more powerful than the shorter trend. And most of the time in the market, guys, these short-term downtrends, you hear them into stock market phrases of pullbacks, corrections, those types of language. These corrections typically do get gobbled up over time by the marketplace, and the market recovers its price action. Not every time do they spin out of control like a pandemic or like a market cycle crash. And so a lot of times they do become buying opportunities. And so your ranking, when you're when you're looking at those rankings, guys, and you're like, well, it's a positive 40 ranking, Matt. Look at what's happening here. I mean, this is bearish. Yes, you're right. The short-term trend in discretionary and technology is bearish. But given the long-term charts being intact, and given the fact that longer-term charts are more powerful in probability analysis than short-term charts, you have to have a positive rankings. And Coach Tyler always says this: you got to buy in the face of fear. And I'm not saying that today in discretionary in the NASDAQ, but that's kind of that mentality at the top levels of the market when you see these corrective behaviors. And it's one tick and it's one day, but that did come into the zone of the 200-day moving average in discretionary. Tim, I just wanted to provide some context to the rankings in discretionary and technology, given the fact we've had 40 rankings in utilities, real estate, staples for a very long time, right? A very long time. But discretionary and technology were the literal leaders of the marketplace over the last 10 years. And so I wanted to provide a little context to those downgrades today in discretionary and finance. Now, healthcare also got a little bit of a 5-point downgrade, just to reflect kind of that same conversation I was having with discretionary and technology. Fighting back here today really has a lot of spirit. Got those spirit fingers out here today. Got a lot of spirit there, Tim. But overall, you're still underneath the 50-day moving average. You still have violated some short-term pivots. And these charts in healthcare are not exactly pretty to look at. And that's the kindest way I can put it. And so when we're looking at this, again, reflecting trend and pattern, obvious downgrade here, not the 10-point downgrade we saw in discretionary and in technology, but regarding the 5-point downgrade in healthcare, put it into that same line of positive 40. So once again, short-term downtrend, overall bullish uptrend, puts it into that positive 40 category. The last one that got the downgrade here over the weekend was real estate, and that's just to put it in line with trend and pattern right there at 50. Obviously, you got short-term trends, intermediate trends, but we felt the 50 burger was really appropriate for what's happening longer term. So that downgrade in real estate was more reflective, just to put it into the ranges of its historical price action more than anything else. Now, the story, though, the absolute story for me anyways, and the story of this week is going to be what's happening in the industrial sector here today. The industrial sector, we don't radically rank things at Tackle Trading very often, but there was a lot of passion around ranking the industrial sector in the face of everything that's been happening over the last 2 weeks. And the industrial sector got a nice little upgrade right into that 20 spot. And so the industrial sector, a big upgrade right into that 20 handle. You got to love, and again, we upgraded on Friday. You got to love the price action here today, but it would get an additional 5 points here today with this type of price action. You got to love the breakout in industrials. We've been crowing about industrials for a very long time. We were like, please break out. Ooh, you gave us a breakout a little bit. That's good enough for us. Breakout again. Ooh, that's good enough for us. Breakout. Go, let's roll. Come on, guys, this is really good here. Industrial's moving. And you know what? There's a lot of potential trades out there. You got to love Caterpillar's bullish flag-based pattern continuation. You got to love Deere kissing off the 20-day moving average. There's a lot of trades happening. Check the scouting reports at Tackle Trading to find the best picks out there, ladies and gentlemen. But you got to love the industrial movement. Obviously, high base breakout. It's a no-sell day here, guys. You got to like what's happening there in industrial, but the storyline once again isn't just industrial. Again, you have this massive cyclical theme playing out. So let's take a look at the other components there. Energy, unlike industrials where it's breaking out, and you got some clean charts out there to take some action on. Energy here is probably performance-based. They are by far the best performing sector over the course ever since the election, but specifically just in the last month and a half, it's the best performing sector. And so typically when something's overextended, we'd like to hesitate with the rankings a little bit because we do put a technical component into the rankings. But with the strength in energy and still a lot of stocks to trade there in the energy space, and obviously a little bit of bump in oil prices on the overnight action as well. One of the highest rated sector for us at Tackle Trading is the energy space. A little bit overextended. It's a little bit tricky to find a good trigger with a great stop loss, given the fact that you are now overextended, and especially when you couple this from this movement here that now takes into account all of earnings season. So you might want some hesitation a little bit, maybe a little Allen Iverson hesitation crossover, put it in the crock pot, let it cook a little bit. But man, energy is hot right now, and it looks like it's going to be continuing because this theme is once again playing out. And I don't want to come across as, that like we're out of the woodworks yet. We're not. The S&P is ranked at 30 for a reason. We're in a volatile, uncertain condition. The bond market, the craziness in the bond market is not over yet. We got very, very important bond auctions this week to get through, and you got a major test of that 10-year bond note. So I'm not saying that. I'm just saying as of right now, these themes that started 4 months ago are continually staying intact, and so you just got to go with the price action. And right now, energy, performance based, theme based, any based, it's got the eye of the market, and the market's focused on it.
It's been a juggernaut.
It's really as simple as that, Tim.
I just want to throw one thing in there. I'm looking at the numbers here on the price scale, Matt. It's doubled since the election.
Yeah.
27 to 54.
You don't see sectors do that.
No,
you see stocks do that.
Mm-hmm.
You don't see sectors do that. It's only when, honestly, it's only in this environment. I don't think you could see a repeat of it. Yeah. It's only in the environment of the pandemic, with energy being the worst sector coming into it with a fundamental condition of just nastiness, and to get so far like beat up in those environments. I mean, it was like bankrupt or grow. Like
Well,
that's where
and
we
that's the thing.
were.
You know, it's crazy price movement from a percentage wise, but it makes sense for me. I mean, if you go to crude oil, I mean, the price of crude oil at those lows was at levels there in the mid to high 30s that we didn't know if these companies would make it, you know,
Yeah.
long term if it never got up. And so, you know, the price movement, when you look at it, you know, it just makes sense. I mean, it's a whole different world today with oil and where the prices
Well,
are.
again, not even the prices reflect what happened with crude oil last year, right?
No.
Because you can't chart that. You can't chart that negative 41 handle that crude got last year. So, I mean, it's just, I don't think it could be recreated. And I certainly don't believe that momentum is going to continue. I don't think in 6 months from now, we're looking at energy at, you know, what would it be? 106?
No,
No, that's not what I'm saying. It's just,
but
I do
it
think
could
your
be,
confidence is growing though.
it could be in the high 60s.
It high 60s, absolutely. High 60s
You
is
know,
what?
I mean, that's a good
20,
percentage return.
25%. It's a good percentage return, and it still beats the market. I promise you that, if that ever happens. So, you know, we wanted to reflect the strength of the trend and the momentum. We wanted to rank the theme that we saw happening in energy, that, and obviously we've been bumping up energy over time, but that 15 handle is the highest rated sector as of right now at Tackle Trading. Let's take a couple look at the financial sector very quickly. Once again, financial, very similar to industrial, breaking out, running here today, and a lot of good trades in the financial sector are happening. And unlike energy, you know, with industrials and finance this week, yeah, you can say you're chasing. If you're not in something right now, you could say you're chasing today. You could say that the market's up 2.5%. You can make the argument you're chasing today, and you might want to hesitate because chasing doesn't really work typically. However, you can't say you're chasing this breakout.
No.
And there is a difference there. Okay. This breakout is a 1-day breakout with confirmation here today. And again, nobody knows what the future holds, but doesn't the probability have to reflect a next leg up at this point?
Well, and I also think it, like if you have very little exposure to finance, or like zero exposure in trading or your portfolio, I mean, you're not going to get many clean patterns like that all the time. And so
Yeah.
when you get a clean pattern and you get a breakout and maybe you're low exposure, yeah, it's something definitely to consider.
Well, and I also want you to think about something, guys. Your opinion, my opinion, anybody's opinion on what something is overvalued or undervalued or overextended or underextended is always subjective based on how you see your time frame. It is always subjective. A trader might look at this weekly chart and say, oh my God, look how far up we're overextended in the financial sector in a pandemic. And I would not disagree with that. I'd say you're right. We are very overextended. We are range up in these. You're absolutely right. You can't expect that momentum to continue. But what about the individual who sees this action as the resetting of the market cycle? Do they have that same opinion of overextended nature? If their view of things, and let me go back a little bit of time frame here, guys. Let's just go back weekly. Let's just get a little bit more time frame. If their opinion in this recovery is we're right there in the recovery, in the new market cycle that did that. And so it really depends on how you see this, in my opinion. If you do not believe we're ever going to recover from the pandemic, then yes, we're probably completely batshit crazy and overextended, and the end of the world is certainly coming next Tuesday. I understand that. But if you see this as an economy reopening up play at the beginning of a market cycle, then you have a different perspective. That's all I'm saying.
Yeah, same thing with energy, same thing with financial, same thing with a lot of these different
Well,
movements that we're moving into. Because if you believe in the
well,
themes moving forward, it's painting a picture not just for today, but it's also been painting that picture for 4 months since the election and
well,
moving forward into
yeah,
2021.
and again, time horizon is very important here because
Mhm.
it does help you understand overextended, overvalued, undervalued, all that jazz, right? How
Mhm.
we make decisions. When our mother, who once again, hard asset type individual, she comes to Tim and me and it's like, hey, listen, I got X amount of money and I'm looking to do something with it. And what was our answer, Tim? What's your time horizon?
That's right.
And she said, quote, my time horizon is 10 years. And we said, you have to get into the stock market. And she is 70 years old.
Mhm. Yeah, you
Think
can't.
now, if she would have said, my time horizon is a year and a half before I need that money, we would have had a different answer.
Mhm.
Context matters. Time horizon matters.
Agree, 100%. Love the analysis too. By the way, Marky, we talked crude oil for there for just 1 second. I do want to get your take just on the drone strikes in Saudi Arabia over the
Before we
weekend.
get into crude
Oh,
oil, though, let me
you had a
finish
couple.
with sectors.
Apologies, brother.
Let's take a look at communications very quickly. Again, one of the storylines that I feel is very confusing is the storyline in comms. Comms most likely should have got caught up in the discretionary and tech bloodbath, and it didn't. And for some weird reason, that's given me some confidence that I shouldn't have. I don't think.
No, it's the same Bitcoin thing, right? If it held up during the volatility, it makes you.
I know,
Get a
but in
little
my
froggy.
head, Mark, like in my head, I keep convincing myself of things I'm not seeing, and I'm just saying, why? Like I just want to know that answer of why. Why did comps not get caught up in the bloodbath? They were standing right there to get shot. They ran with them the whole time, and they get off.
Mhm.
It makes me interested.
Mhm.
It makes me love that breakout at 74. I'm not gonna lie.
Yes.
It makes me love that breakout at 74. And Tim, before you got into crude, I just wanted to pull up the comms chart because comms, once again, the upgrades we saw this week were cyclical based.
Mhm.
Energy got an upgrade, industrial got an upgrade, finance got an upgrade. Things that got a downgrade obviously were not, right? Discretionary, tech specifically, defensive sectors in general, just because nobody cares about defensive sectors right now. It's a growth environment, right? And so I just didn't want to leave comms off that list because comms did get an upgrade here. Comms, let me get the actual ranking. No, maintain. We maintained the ranking right there at 20, right there in the finance, right there in the industrial ranking. And so if you're looking at industrials and finance breakout, loving those, I think comms could break out too. It hasn't done it yet, but I just wanted to get comms on people's radar because that 74 breakout looks legit.